The Bank of England has just increased the base rate to a whopping 5%, and this is undoubtedly causing concerns for many small businesses. The Bank of England is deliberately trying to squeeze us all so that we spend less, and this means that your customers might have less money to spend with you, and if you've got any finance products in your business, the interest rates could have soared also. So we'll take a look at the reasons why interest rates are so high in the UK at the moment and what you can do in your business to protect yourself. So if I could just ask you to hit that subscribe button right down there in the bottom right hand corner and we'll get going. So in the UK, the interest rate is controlled by the Bank of England, and their job is to try and keep prices in the UK stable. But with inflation stubbornly high, we know that they're not doing a very good job. So usually inflation increases because the public has lots of money to spend. And the Bank of England responds to this by increasing the interest rate, which makes it more expensive to borrow money and therefore public spending slows down. This in turn means that demand for products decreases and therefore companies decrease their prices to try and remain competitive. But this latest bout of inflation that we're seeing in 2023 has several different causes, and this is making it increasingly difficult to control. Now, one of the main causes for inflation at the moment is because during COVID, the Bank of England printed a whopping 450 billion of extra money known as quantitative easing. And the majority of this money they loaned to the government to enable the government to introduce the furlough scheme and other things that supported the public throughout COVID. But throughout COVID, what we can see is that the amount of money that the general public in the UK was saving soared to new levels. This means that a lot of that furlough cash was going straight into people's banks and not back into the economy as was the original intention. And now people have returned to their normal lives, they're spending this £450 billion in the economy right now, and that's instead of borrowing money. That's why interest rates are not having as much of an impact as the Bank of England would have liked. Now, as well as the quantitative easing that the Bank of England did during COVID, combined with the complications of the furlough scheme and other COVID support, there's also the complications of the Ukraine war, which we know has pushed up energy prices in particular, as well as some commodities such as grain. And of course, don't even get me started on the impact that Brexit has had. And the world economy is still experiencing the fallout from COVID to the global supply chains. Because during COVID, we saw many factories and other similar businesses just shut its doors overnight. And this has meant that we've run out of many different products. So even though this has largely returned to normal now, there's a massive backlog, and this has greatly increased demand for certain products. And when demand increases, so do prices. So we now know why inflation and subsequently interest rates are really high at the moment in the UK. But what can you do about it in your small business? Well, probably the biggest concern that a lot of businesses have at the moment is the impact on the interest rates on any financial products they have. So perhaps, for example, if you have an overdraft or you have a business loan that's on a tracker, you would have seen your repayments go increasingly high. So the only way you can really deal with this right now is to try and reduce the amount of money that you have on finance. So you need to be looking at trying to improve the cash flow in your business. And the most obvious area to start is by looking at how frequently and how quickly your customers are paying you, but also seeing if you can get extra payment terms from your suppliers so that you're holding your cash for as long as possible. This means that if you've got flexible products such as an overdraft, you can decrease the amount of finance that you've got and therefore decrease your interest charges. I would also suggest that if you have a finance product that is coming up for renewal soon, that you're looking at doing this also, and that you're not looking to take out a loan of the same size when it's renewed. Finance in business is not necessarily a bad thing, especially if you've got growth plans. Sometimes actually it is still appropriate to continue with your plans and to get that business loan or whatever it is that you need to drive your business forward. So what you do need to do is make sure that you have a very comprehensive business plan. And in this scenario, I would say that you need to be planning for the worst case scenario. There's two things that are unpredictable at the moment. Not only could the interest rates continue to climb, but with economic uncertainty on the horizon, it's probable and possible that your sales could decline. So you need to make sure that whatever business plan you've got has allowed for these two scenarios and you're aware of the worst case scenario that you could end up in. As long as you personally are comfortable with the risk that you're taking and that the project is still profitable and cash flows and you can afford the repayments, then there is no reason why you can't continue to go ahead with it. And the third option that small businesses can look at is to try and utilise personal credit as much as possible to fund their business during this uncertain time. So personal credit generally is much easier to get hold of, and the interest rates tend to be lower and the product fees tend to be lower. And in fact, there are many credit cards out there, for example, that come with 0% purchase periods. So if you're needing a modest amount of cash in your business, then putting some costs onto a personal credit card with something like a 0% interest period could be a really good option for getting you through this uncertain time where interest rates are fluctuating and increasing. Just recently, one of the business projects that I worked on managed to put up to £50,000 on credit cards, and I haven't paid a penny of interest on any of them. So it can be a really effective way of plugging short-term cash flow in your business. But as with anything, I'm an accountant, not a financial advisor, so it's really, really important that you take professional advice based on your personal circumstances and that you're not putting yourself at any risk taking on products that you can't pay back. So if you enjoyed this video, make sure that you hit like and you subscribe to my channel, and let me know what you think in the comments below.